Riot Platforms is supposed to be a Bitcoin miner. This week, it started looking a lot more like an AI landlord. Riot disclosed a 20-year agreement to supply 191 megawatts of compute capacity from its Rockdale, Texas campus to a leading frontier AI lab with expected contract revenue of $9.1 billion. Barron's and Bloomberg reporting identify that customer as Anthropic, although Riot and Anthropic have not publicly confirmed the name. Apparently, Riot updated its resume, and AI liked the power section. The weird part is that this career change actually makes sense. AI labs need chips, servers, cooling, networking, and electricity. But one of the hardest things to secure quickly is large-scale grid-connected power. Riot's Rockdale site has 700 megawatts of developed capacity, and the company says its broader approved power portfolio totals about 2 gigawatts. Bitcoin mining is one way to monetize electricity. AI data center capacity is another, and long-term contracts can make the revenue stream look very different. But this is not as simple as unplugging a Bitcoin miner and plugging in Claude. Bitcoin mining uses specialized ASIC machines, while AI infrastructure needs accelerators, high-speed networking, different cooling systems, and data center-grade construction. The transferable asset is not the mining hardware, it is the site, the power interconnection, the land, the substations, and the ability to build around them. That is why the most valuable line on Riot's resume may be measured in megawatts. Riot had started proving that thesis before this deal. In January, it signed its first data center lease with AMD at Rockdale, initially for 25 megawatts of critical IT load, and AMD later exercised an option that brought contracted capacity to 50 megawatts. Riot says the original deployment was delivered by May, so this is not a company waking up on Monday and deciding to become an AI landlord by Tuesday. The pivot has been under construction. Still, the $9.1 billion headline needs one giant asterisk. That is expected contract revenue over roughly 2 decades, not a check sitting in Riot's bank account today. The new capacity is expected to come online in phases through June 2028, and building at this scale requires execution, capital, cooling, networking, and a customer that remains financially healthy for a very long time. A giant contract can be real and still leave ways for the economics to disappoint. Wall Street loves a big number. Accountants prefer to see it arrive. That tension matters because Riot is not suddenly an AI company with Bitcoin as a side hobby. In its latest reported quarter, Bitcoin mining still produced the majority of revenue, while the data center business was much smaller. The interesting change is optionality. A power-heavy asset that used to have one obvious job now has another buyer willing to sign long-duration capacity agreements. And Riot is not alone. Other crypto miners have been moving toward AI and high-performance computing for the same reason. Electricity access has become a strategic asset. So the calm takeaway is not that AI killed Bitcoin mining. It is that the market may be repricing what a Bitcoin miner actually owns. The surface story is a $9.1 billion AI deal. The deeper story is that scarce power, land, grid access, and build-ready infrastructure can be more valuable than the original workload sitting on top of them. Now the thing to watch is execution. Whether Riot brings those 191 megawatts online on schedule, whether data center revenue starts becoming material, and whether more of its power portfolio finds AI customers. Turns out the miner may have been sitting on a data center business wearing a Bitcoin uniform.